If you can hear me, somebody could please send me a message that my voice is audible. Good morning, everybody. This is Vijay Bhambwani. Can somebody please let me know if my voice is audible, please? All right, that's great. Welcome to this Q&A session. And we are basically trying to reach out to we're trying to basically reach out to our viewers, our fans, our subscribers, and basically trying to address your queries. I'm trying to share my trading experiences, trading hacks, and the effort is basically directed towards enhancing your profits, seeing to it that you make a lot more money than you are making right now. So let's get it going, and one by one, I would love to hear from you, address your queries, even if it is about trading systems, your trading experiences. Do remember that due to compliance issues, I cannot give you buy or sell recommendations. This is a discussion rather than giving you trading calls. We are not here to give trading calls. This is not investment or trading advice, please. So let's get it going. All right. Please fire away your queries, and I'm going to take each one of them as it comes. You see, first of all, the top of the mind recall question that I am sure most of us or all of us would be having on our minds is, now that the Nifty has hit a new high, an all-time high, and this is something that we traders call blue sky zone. Clear skies ahead, and there is no level above this where you could have bought, and you are waiting to break even before you can book profits. So there is no overhead supply coming in from people trapped at higher levels. This is a unique place where the markets can be, and which is why the only selling that can come is from short-term traders who are impatient, who basically want to book gains. Nothing wrong with that. But apart from that, significant amount of selling will not come from people trapped at higher levels. That is the beauty of a new high. And of course, there will be some skeptics who will want to test their luck with trying some shorts. That's just about the only selling. So volatility, unfortunately, will remain high, but the markets have a probability. Remember, we are dealing in probabilities, not guarantees. The probability of the market extending these gains is fairly good. So these are good times ahead. We are going to ride out the afternoon. All right. So Mr. Vijay Kumar is asking, how do you trade in options? Well, you see, options are a very unique kind of a trade. I'm not saying it's an investment because it's only a trade. Options are everywhere in our lives. You know, when you're booking a property, say you're buying a flat, you're actually taking a call option on that flat. So supposing you're booking a property, a flat worth 1 crore rupees, you give the seller of the property 1 lakh rupees as the token amount. Consider that 1 lakh rupees token as the option premium. All right. And you have a time limit, which is preset between the buyer and the seller. And If at all you do not pay the remaining 99 lakhs because the value of the property is 1 crore, you've only given 1 lakh. If you do not pay the remaining 99 lakhs within, say, 90 days, your 1 lakh rupees will be forfeited. That will be kept by the seller. And at the same time, he also gets to keep his own property. So he's received 1 lakh rupees and the property is also his. So in options, like say when you're buying a call on Reliance, you are booking Reliance, the market lot being say 250 shares, hypothetical example, by paying a small premium. If the price of Reliance is higher than the strike price plus the call, you will sell it at a profit. Otherwise, you will forfeit the premium. That is in simple the strategy to play options. The other question is, do you invest or should you trade? You know, this question is like religion. Is Sikhism better than Hinduism? Is Islam better than Christianity? Is Christianity better than Hinduism? What is the purpose of all these religions? It is to converge to different gods we call by different names and attain nirvana in this life and the next for those who believe in it. It's just the way we pray in different religions that differs. So what is it that you intend to do when you are trading or when you are investing? The main objective is monetary gain. Now, whether trading is better or investing, now, frankly, there is no easy answer to that because in financial markets, there is no solution which says one size fits all. That's a myth. In computers, Microsoft pioneered what is now known as the TTF, the two-type font. What you see is what you get. When you print out something that you see on your screen, that's exactly how the printout will look. It's called what you see is what you get, WYSIWYG. In financial markets, WYSIWYG does not exist. All right. So what happens when you see your friend who's making a lot of money trading? It looks like easy money, piece of cake. But trading profits are the most difficult easy money you will ever make. I can assure you of that. It requires skill, perseverance, patience, and a capacity to bear losses. Now, somebody could be very, very suited for trading and not for investing. Yours truly is one of them. I simply don't have the patience to wait for 10 years to multiply my money. I'm very, very comfortable with the idea of losing 20,000 rupees in 3 minutes if it means that I have a fighting chance of making 20,000 rupees in 3 minutes. I would rather be there rather than wait for 10 years. So it's a question of attitudes and aptitudes. No such thing as what is better, trading or investing. It's entirely up to you. Nitin Bhojani is talking about the WIX being low, but volatility being high. Is this anomaly something that is a mystery to you? Then let me solve this mystery for you once and for all. If you were to scroll down in the playlist called the Fast Profits Daily in Equity Masters YouTube channel, I have addressed this question many months ago. What is WIX? The WIX is volatility based on the changes in the options premium price. All right. And what is beta or volatility? Beta or volatility is the change in price of the asset itself. For those of you who can't get what the difference is, let me explain it to you. Options premium and the change in the option premium, which is where the WIX is calculated, shows the expectation of the traders, which is why they are buying or selling options. All right. Expectations can be built on greed and fear, which are emotions and therefore irrational. But beta or pure volatility measures the price change in the underlying asset, not on the option of that asset. Option is a derivative, which means derived from the price, whereas the price is the price, the purest form of a benchmark or the measure. So when I measure beta, I'm seeing where the price is right now. It is a lot more reliable than VIX. I don't trust the VIX. Sorry, guys, who who bet the bank on VIX and treated like an infallible benchmark. I don't trust the VIX. I trust the beta. I trust statistics. And if you join Equity Master's Telegram channel, which goes by the handle Equity Master Official, I talk about the beta and the basis of both the Nifty 50 and the Bank Nifty every evening, very late in the evening, admittedly, but every day, and you can get it all there for free. All right, the next question. How do you pick stocks for intraday? Here again, there are ample videos that I've put up out here in the Fast Profits Daily YouTube playlist, wherein I've talked about picking up the best possible stock for intraday. But since this question has come up here, I'm duty bound to kind of recap a little bit. Number one, take a list of 3 stocks which are bullish and 3 stocks which are bearish. Why? Because we don't know what the market is going to be like. You think the SGX can give you a hint of where the market will be, but it doesn't quite work that way. You think what the Dow did overnight might 100% be replicated by the Nifty or the Bank Nifty. Doesn't quite work that way. So keep a list of 3 stocks which are bullish and 3 stocks which are bearish ready, based on whatever parameters that you are using: technical analysis, screen reading, statistical analysis, or just plain gut feel, based on, of course, some parameters. Now, if the market is going higher, focus on the 3 bullish stocks, because you want to go with the flow, not against the flow. A good trader does not swim against the tide. He flows with the tide, right? So choose 3 stocks, take the strongest one in a bull market and go with it intraday. Take the weakest one in a bear market and short sell it intraday. Now, for short selling, 2 weeks ago, I have recorded a video, the basics of selling short. Please see that video. I've also explained to you screen reading using a snapshot window as to how you can go short intraday. All right. Another question, the RSI, or the relative strength index, and the stochastics give you contrary signals, and oftentimes they can confuse a trader. Which one should you be taking? Now, this is a very lovely question. As a trader, I'm very excited to talk about something that connects with me on an intellectual plane. I thank you for asking me this question. All right. Now, the relative strength index, the RSI, was formulated by J. Wells Wilder in the 1970s. And stochastics was formulated by an equally well-known and competent technical analyst, Mr. George C. Lane. The stochastics basically measures the short-term overbought and oversold levels, whereas the relative strength index compares the strength of the security vis-a-vis its recent performance. All right. So when you're basically trying to compare stochastics with RSI, you're basically trying to say which one is more beneficial, an apple or an orange. Although both appear to be measuring the same thing, they are not. And I'll give you a small hint. If you think that the RSI is an overbought / oversold indicator, which is what a stochastics is, you're mistaken. If you were to go short on the RSI when it hits 70, which is supposed to be overbought, you will come to grief in a market like today. You will see many stocks which are showing RSI at 70 plus for a sustained period of time. And in a bear market, you will see many stocks which are showing RSI of 30 or lower for extended periods of time. The stochastics will go down and bounce. The RSI can stay down or stay up for extended periods of time. So these are not two linear comparisons. Now comes, which one would I favor? Given a choice, I would go blindsided with the RSI any given point in time. I think it's a far more reliable oscillator. I hope this helps you. All right. Now, Mukesh is asking about how do you achieve 2% return per month from the markets and having, say, fixed capital of, say, 25 lakhs or 2,50,000 or whatever it is that you choose to deploy in the market. Mukesh, this is a burning question. And in this time and period of COVID, when we are constrained, many of us are constrained to depend on returns from the equity markets for even fulfilling some of our expenses. Yield or return assumes a great degree of importance. So I understand where you're coming from. Now, the best way to try and achieve a certain amount of return on your capital is to break it down into 20. Why am I saying 20? Because you have approximately 20 trading sessions in a month. So if you're looking at, say, 2% per month, break it down to 0.10% per trading session. All right. That way, you will not pressurize your mind. You know, we traders are brain warriors. We win and lose with our ideas, with our heads. So if you were to try and achieve 2% in a single day, that's a very daunting task. But if you break it down into 20 days and say, okay, I have 25 lakh rupees. I need to make 2% per month. If I make 0.1% per day, how does that feel? How does that feel? A lot more achievable. So break it down, but market is not here to give you 0.10% like clockwork without a break every day. So you'll have to target 0.12 or 0.15 because there will be some days in which you will lose money. It is inevitable. Only social media stars and social media heroes can make money 100% of the time. Real world traders, people made of flesh and blood who are honest enough to admit what's happening, will tell you that it is not possible to make money for more than 7 times out of 10. So I wish you all the best in trying to achieve this target. All right, which is the best and optimal setting to keep for trades in a bull, bear, or sideways markets? I depend on the price as a primary determining factor of whether I should be going long, going short, or playing chicken. Playing chicken is take 5,000 shares exposure, wait for 10 paise. That's how you make 500 rupees. In a chicken market, believe me, that's all you can do. Consider yourself like a cricket batsman. Can you hit fours and sixes on every ball? I don't think so. I think your job is to keep the runs coming. So sometimes you have to hit singles and doubles, and once in a while, when the bowler makes a mistake, you hit him for a six. So what you do is play on the price. Unfortunately, a lot of rookies get so enamored and enthralled and infatuated with the colorful, ziggly, wavy lines called oscillators that they start basing their trades on the oscillator. That's a mistake. The oscillator is a derivative of the price. If you go to McDonald's when you're hungry, the ketchup is free, but you're not there to eat the ketchup. You're there to pay. You pay and eat the burger. The price is the burger. Play by the price. Now, is the market ranging? Is it range bound or is it trending? Simple question, simple answer. If the bars, the size of the bars that the market is making is small and it's staying within a high and a low band, it is a non-trending or a chicken market. If the size of the bars is big, what technical analysis calls power bars, this market is going to range or break out of the range. It's going to be a trending market. Now, very simply, in a trending market, to make 5,000 rupees, buy 500 shares, wait for 10 rupees, you get 5,000. In a non-trending market, to make 5,000 rupees, you buy 50,000 shares and play for 10 paise. Simple. Yes, I think 0.10% per day, Mukesh, is achievable. It's not a very difficult task to achieve if you come to think of it. Now, if you are to deploy to 25 lakh rupees, 0.10% is not the sun, the moon, and the stars at all by any chance. I don't think 2% a month is something that I think is impossible to achieve. For example, I'll give you a very small example. This is not about boasting rights. I'm not saying I told you so. Okay. Very recently, the Vertical Trade Alert Service recommended a short in a banking counter. Now, banking is something if you've seen my Fast Profits daily videos, you know that I'm a big fan of the bond market. It's an ocean, and that ocean happens to see the waves hitting the shores, and your banking stocks are the shores. I had a signal from the bond yields that banks were likely to come down. I can assure you, like I said, like a cricket batsman, you have to keep the runs coming. Sometimes you make 1,000, sometimes you make 2,000, sometimes you make 5,000. Right? But this was a day when I decided it was time to hit a six. We achieved 5.04% return on capital in under 100 minutes. So yes, it can be possible. As long as you're disciplined, and do remember, you have to wait for a trade. Don't force a trade. If you're trying to earn every day, it's not possible. There are days the market doesn't budge and you'll have to give it time. No choice. All right. You know that you have to enter and exit a trade, but when should you enter and exit a trade, and how do you time that enter and exit? The entry itself is something that I have a few guidelines for you. First of all, if you're an intraday trader, there are three kinds of traders. First of all, one is a BTST STBT trader. BTST is somebody who buys in the last 2 or 3 minutes of trade on day one and sells it in the first 2 minutes of the trade on day two, maybe 3 or 4 minutes, the first 3 or 4 minutes of day two. The second kind of a trader is pure intraday trader, which is something that I am. All right. I will not want to keep my position open for the next trading session unless the trade is very, very compelling. Okay. The third kind of a trader is a swing trader. He or she does not mind taking the trade over from one day to the next, next to the third, third to the fourth, till the profit target is met. Okay. So I'm assuming that, like me, you're targeting intraday trades wherein you will extinguish or square up the trade on the same day. Rule of the thumb, and this is my rule of the thumb, feel free to disagree. Rule of the thumb, don't enter in the first 3 to 4 minutes because the STBT and BTST guys are getting in and getting out. There's a lot of choppiness, there's a lot of emotion, there's a lot of excitement, there's a lot of greed, there's a lot of fear happening in the price. I don't want to get into all that. So the first 3 to 5 minutes, I keep myself calm by having my second cup of coffee. Okay. Once the price settles down, then you enter. Exit is a lot more complicated. All right. There's an excellent book by Mr. Cassidy. It's not when you buy, but it's when you sell that counts. It's a very long title, but it's a beautiful book. All right. Because booking profits is what brings the money home. People in my community say, and we are business owners, they say, your payment is received for goods that you sold only when you receive hard cash or the check clears in your bank account. So selling is like encashing that check. When do you sell? Now, this is a difficult proposition. Ideally speaking, you should let your profits run as long as the price is going in your favor. Now, when do you get out? Many a times, the trader makes a mistake of allowing a profit to turn into a loss. That's where problems occur. So I have a rule of the thumb. If I'm making, say, 10,000 rupees profit, I will wait for 25 or 30% of the maximum notional profit to get eroded. Like say, I'm seeing on my screen, I'm making 10,000 bucks right now. If that profit reduces to 6,500 or 7,000, I will get out. I don't care. After me getting out, it could have become 50,000 or 1 lakh rupees. That's a trailing stop loss. Exit. Don't let a profitable trade become a loss-making trade. And if the trade has started losing money immediately after you enter, exit anyway. We don't want a festering wound to become an amputation case later. Exit. Mr. Venugopal says, sir, in trading, retail traders only see the chart and the chart is of the retail traders only. Mr. Venugopal, there is a slight update or a kind of addition from me, if you will. I'm not able to get the right word. You are watching the chart, which is telling you the activity of all the players put together. The FIIs, the DIIs, the prop traders. Prop traders are brokers, individual trades, they're specialists, and the jobbers, the floor jobbers who are now sitting on computers because the trading ring is shut. And of course, the retail traders. So in the price chart that you're seeing, it's a cumulative buy and sell action of all 4 types of players. All right. FIIs, DIIs, prop, and retail. But if you were, the most fascinating thing about life is that when you observe the world around you, even in your kitchen, your bathroom, when you go out for a walk, you can actually learn trading lessons. So if you've gone to the kitchen and peeled an onion, you will realize that there is a skin after skin which you need to take out, peel, before the onion is edible. All right. This is called the Tor effect. Tor is the onion ring. Now, analysis of the market in the Tor manner is that you take technical analysis charts, statistical analysis, screen reading. I have put up ample number of videos on Equity Masters YouTube playlist, which shows the snapport window on my trading terminal. And I have explained how a buy is generated, a sell is generated. If you're a weekly cash alert subscriber, there is a 6-part series of educational videos, which you would have definitely seen. A lot of time dedicated to screen reading analysis. Statistical analysis using Microsoft Excel is something that I use very often in Equity Masters Telegram channel to generate output, which I have told you to join. Please join if you haven't joined already. So you can't really look at the price chart alone. You have to look at everything. The more data you analyze, the higher is the success probability. I wish you all the best. Mr. Jaykumar Menon has asked a question which I am sure will appeal to many viewers of this Q&A session. It is a question that is very close to my heart. All right. Is intraday trading likely to result in sufficient income to basically run your house and become a self-sufficient unit? In the forge, in the Air Force, when a pilot goes up in the air at 35,000 feet above the ground level, he's an SSU, self-sufficient unit. He has to take his own decisions to hit or not hit, fire or not fire, kill or be killed. So can you become a self-sufficient unit by intraday trading alone? You're talking to an SSU. You're talking to a guy who's run his house on trading income. You're talking to a guy who's lost it all in the dot-com bust in the year 2000. I was almost bankrupt. I come from a very well-to-do family, but I bankrupted my family and I'm back again. It took me 9 years to do it, but I did it. I'm here again. And I very sincerely believe that intraday trading can give you the liberation of not just being able to afford what you want to buy, but also to liberate you enough, which is a higher form of liberty, to say no to doing things which you don't want to do. You don't want to take a job, you can say, no, I don't want to take a job. I'm earning enough from day trading. You don't want to tolerate somebody you can't tolerate because he is making too many demands and you're doing it for the money and you don't want to do it. Yes, by intraday trading you can, but it will take time. The best Wimbledon players are the ones who have started practicing before the age of 10. How long does it take to reach there? Very simple rule of the thumb: 10,000 training hours. Is trading any different? No. So what is 10,000 trading hours culminate into? Divide that by 6.5, which is what the average trading session on the NSE is. You will see that many trading sessions that you need to learn before you can become an SSU or a self-sufficient unit. All the best, sir. Siraj Multani says, is it possible for somebody to do swing trading or delivery-based trading and still generate a great deal of wealth and, of course, live a good life? Yes, Siraj. Like I said, trading versus investing is a question like which religion is better. Hey, we want to worship our gods. And after we go up out there, tell him, God, I've lived a good life and I've been a good boy or a good girl. That's it. It's just the manner that we do it differs from religion to religion. So can you make very big money in swing trading or even investing? Yes, you can. What should you do? You should do something that appeals to you, something that suits your aptitude and attitude, something that does not make you sit on the edge of the chair all the time and make you tensed. The quality of earning is as important as the quantum of earning. I would love to make $1 million every day. Can I, at some point in time, I ask myself this question, can I make $1 million in a trade? And the answer is invariably, I might be able to. But the reason why I'm not doing that kind of a trade is because I'll be tensed. I'll be very, very tensed. I haven't reached that scale where I can make $1 million from one single trade. And that tension will ensure that I die 5 years before time. That kind of earning is not sensible. So take it easy, but at some point in time, you will be able to make big money from whatever avenue of investing or trading that you choose. Mr. Srinivas Ramanna asks, is algo trading beneficial? If yes, please elaborate. Well, algo systems are basically allowing a computer software to determine a buy or sell signal. And algos have become smart enough to actually go beyond that. They are now also taking decisions on your behalf and entering trades of buy and sell. All right. Are they good? Like I said, in financial markets, one size does not fit all. There would be somebody who'd say, okay, I don't mind if the algo trades on my behalf. I'll love to see it over a 3-month period as to how much return it generates. There would be somebody else who'd say, look, I'm very scared. Maybe it'll lose my hard-earned money. So I'm going to be in command. I'll enter my own trades. The third guy could be, I'd say, I'll let the algo tell me what to buy and sell, but the actual decision making is something I will do. I will press the computer keyboard button to buy and sell. Let the algo tell me when. So the guy who lets the algo do the trades is resorting to black box trading. The guy who does not want algo is a discretionary trader. The guy who lets the algo decide what he must do, but actually presses the button, is a gray box trader. Which one do you want to be? That depends on you. Mayur Virani asks the question, which day is likely to be trending, which is likely to be sideways, and how do you tackle that particular day? Mayur, it's been 3.5 decades, and it's been 3 decades since I was married. The two things I have still to learn to accurately gauge or forecast is how my wife's mood is going to be for today and which way the market is going to go and at what speed or what velocity, which means at what trending kind of momentum. You can only make educated guesses. If the price is opening close to the previous day, maybe the market will be a very measured, calculated, and a slow and trending market. And if it is opening with gaps up, like a small child who is so full of energy, he gets out of bed, a 3 or 4 year old child gets out of bed, starts jumping, wants to play with his ball, and you're rubbing the sleep out of your eyes and saying, "Beta, chup baitho, keep quiet, let me just get out of bed." If you see the market prancing like a small bubbly child, that day is going to be a trending day. But don't take my word for it. Markets are known to get from bubbly to quiet and quiet to bubbly. All right. See what happened on Thursday. The Nifty and the Bank Nifty opened very quietly and suddenly, boom, new high. Right. Be useful is asking, I bought an option and next day it went into a trading ban. What should you do in circumstances like this? Now, this is not something which is unusual. I don't know what your real name is, but your handle is Be Useful. So I'm going to give you some useful advice. On the NSE's website, and I think every trader should spend some time on that website. On the NSE website, approximately 6:30 or so, but on weekly and monthly expiry days, it could be up to 9 p.m. when all the useful data that a trader needs is finally uploaded. All right. Just remember, weekly and monthly expiry days, it could be up to 9 p.m. on some days, but on non-expiry days, up to 6:30 p.m., all the data files are there. One of the most useful data files you will find out there is securities going in a ban period. Why do securities go in a ban period? Because the MWPL, or the market wide position limits, have crossed 95%. All right. Now, this is something that I update on Equity Masters Telegram channel, and I can't tell you how much you will find those updates, two of them. They are very brief. They are with statistical charts, but I assure you, your child in the 5th standard will be able to understand those charts. I specialize in simplifying things. And I give you MWPL figures every day. So don't get into those counters which are very close to, on the brink of, or are actually in the ban period. Because if you try to enter a stock in which is in a ban period, there will be 5,000 rupees penalty per lot for initiating a trade there. All right. Avoid trouble. Don't go there. Getting into a stock which is getting into a ban period is like purchasing trouble at a premium. You don't want to do that. Is there a single system which we can follow for decades and we can make significant amounts of wealth? Yes, there is. And the system is be simple. Be simple. I used to write for a couple of newspapers, and I formulated a lot of my trading ideas by writing for the print media. Right? Because number one, I started writing, say, 21 years ago. And in those days, there was no such thing as WhatsApp or Twitter or Facebook and whatnot. And of course, I was on TV, but I loved writing. And you can't bullshit. What you've written stays there on the next day's newspaper, whereas things that you've said on television is forgotten. So I got a lot of feedback from people. And the first thing my editor told me was, Vijay, if you can put a most complex economic theory, which you specialize in, by the way, simple enough so that your maidservant, your driver, or your cook can understand if it is explained to him in his mother tongue, you have achieved nirvana as a good writer. The same thing applies as a good trader. You will be shocked to know what I follow. Of course, I follow 108 different methods in my statistical program, which I call the Barracuda. All right. It's in-house. I developed it myself over the last 15 years or so. But when it comes to what I really go with are three things: the price, the traded volumes, and if it is FNO, which of course I trade only FNO stocks, is the open interest. If the price is rising with volume and open interest, and please see the Snapquote window tutorial. It's a box that comes up when you highlight that security and click on F5 on your computer trading terminal. On your mobile app, it will be long press or a single tap. The best 5 buyers and best 5 sellers come up, and average traded price, last traded price, previous close, etc., all come up there. And I've trained you how you can basically do day trading based purely on this Snapquote window. So yes, I have been doing this for years. I'm pretty happy following this system very simply, but with discipline. With discipline. The problem occurs when you make 3 or 4 non-stop profitable trades, and then you start to act like God. Don't do that, and you'll be rich. I promise you. What other things to watch along with the SGX Nifty? You see, the SGX Nifty is like garnishing. Garnishing is the additive that you add on top of your food. For example, if you're eating a pizza, there is a base, there is a crust, and there's cheese on it. All right. You want to add some oregano, you want to add some chili flakes, you want some mustard sauce. All these 3 items are garnishing. So the SGX is garnishing. Does it help? Does it matter? Yes, it does. It does because it gives you flavor, it gives you taste. But what is it that you're actually after? Are you going to fill your stomach with garnishing, or is it the pizza that you're after? The Indian price is the pizza. Garnishing will make a difference, no denying that, but it's the pizza that you're after. What's the price? If you permit me, I will tell you a short story. A guy wanted to learn gambling, and he was rich. He had set out his heart on learning gambling, and he said, I want to learn gambling, so let me go to the best nightclubs. He went to the biggest and best nightclubs, and he asked people where the highest stake tables were. They guided him to the highest stake table, and he observed for a while. He saw people coming and going. Guys would lose all their wealth in one shot, go away, bet everything in one trade and go away. He said, this can't be it. I need to go to a place where there are more expert gamblers so I can learn from them. He was guided to smaller and smaller clubs. And finally, when he went to some small club where it had no AC, no fan, just a makeshift light, and people were betting with money, and they were gambling away for hours, and big money was changing hands. He said, these guys seem to be expert gamblers. Each gambler is sitting on the table a couple of hours without getting bankrupt. Can there be somebody else who's better than this? The guy who owned the gambling club told him, these people who are at the table don't care about the air conditioning, the light, or the fan. They are here for the sake of gambling. They are simple. They don't care for the bells and whistles, and that's why they are here. This, in short, tells you what trading is all about. Yes, you can. Siraj Multani is asking, what is a reasonable time frame a trader can become successful? Siraj, I think I answered that question. If you were to kind of compare day trading success with a Wimbledon or an Olympic level champion, which is what trading is all about. Trading is fiercely competitive. It takes 10,000 training hours for a championship level player to reach where he or she wants to be. I don't think it will take you any less time to become a proficient trader who can live off on his earnings from the market. So 10,000 hours divide by 6.5, because 6.5 is a span of time of each trading day. That will tell you how many trading sessions it will take you approximately. There are people watching this Q&A session who can do it faster. There will be some people who might need a little more time. It differs from individual to individual, but approximately that is the kind of time it will take you. But I can assure you, it can be done. You're talking to somebody who's done it. Mr. Srinivas Ramanna is asking, how safe is the margin money in the broker account, even though we receive reports on it on a day-to-day basis? Mr. Ramanna, you've touched a very sensitive nerve in my heart. I am a very cautious person by nature. Remember, in the year 2000, from a multimillionaire, I have gone to near bankrupt. So I'm very scared about losing money. And this is a question that keeps me awake at nights. The simple hack, protection, rule, call it what you want, is to have more than one broker account. Is to not have all your eggs in one basket. I can't emphasize this enough. And you can rotate your money from one broker to the other. Say in one quarter, you deal with XYZ broker, and another quarter ABC, and the third quarter 1, 2, 3. And the minute your payout starts to take time, your relationship manager starts to drag his feet and say, I'm going to give this payout to you tomorrow morning. I want my money back. No more trades. As simple as that. But that said, SEBI has kept very stringent checks and balances in place. Brokers are maintaining a huge degree of a margin of safety with the clearing corporation and their professional clearing members. If they are not self-clearing members, that is, they're well capitalized. Gone are the days of the Harshad Mehta scam or the year 2000 when brokers used to go belly up, which is bankrupt. Chances are remote, but hey, it's a right question. Be prepared. Asthana is asking about a brief description of the services that I provide. Equity Master believes in a bouquet system wherein each editor or each specialist who considers himself to be comfortable with that segment of the market provides that kind of advisory or trading service. I feel comfortable talking about commodities, currencies, and equity derivatives. So we have services like the weekly cash alert, which is commodity based, vertical trade alert, which is primarily day trading in equity derivatives, and a fast profits report, which is a medley of commodities and currencies. It's a monthly output wherein I take a commodity based view on where the market is going. And my colleague Brijesh Bhatia takes a view on what stock will benefit from my view on commodities and recommends a stock. This is like a filtration system. We take a dual approach, the commodity on which the trade is based and the best stock which is likely to benefit from that commodity. So three-pronged, three services. You can feel free to contact the customer support of Equity Master. They'll be more than happy to help you and you'll be on board in a few minutes. The contact details, the telephone number, etc. is given on www.equitymaster.com. Dheeraj is asking about what if promoter shares are pledged? What red flag does it indicate? Now, a promoters pledging their shares is a knife that cuts both ways. You know, of late, By off late, I mean in the last couple of years, more than a decade or so, equity shares for promoters have become like quasi currency. Quasi is semi. Why am I saying it's become like semi currency? Because you can pledge it with a bank or an institution and raise money for it. Now, there are two ways to look at it. A promoter will not pledge his share to an institution and risk not being able to repay that money and the shares being sold in the market and the management control of the company that he formed with his blood, sweat, and tears be yanked away from him. On the other hand, a promoter could see that the company is not a viable unit anymore. It cannot be saved. So why not pledge the shares before they're about to collapse, which is what Vijay Mallya did, by the way. He saw Kingfisher could not survive, pledged his shares with the banks, gone to London. The banks are holding the baby, the share does not trade anymore. Now, if the promoter is pledging his shares, is it necessarily a bad thing? Not necessarily. If the guys have skin involved in the game and the company is doing fine quarter after quarter, it looks like the company management is trying to save the business and run it better and better. There's nothing wrong. Actually, it could result in faster growth. But after pledging the shares, if they don't care, and you see them in nightclubs, and you see them buying new cars, and you see them going out for foreign holidays rather than go to work in the office, you know they don't care. So it's a knife that cuts both ways. Dhanalakshmi is asking for a trading tip or an investment tip. One stock, Crorepati stock. I'm sorry to disappoint you. I don't have that kind of intelligence to give you one stock that can make you a Crorepati. You are talking to a hardcore, chronic, incurable day trader who trades in and out of the markets every few minutes and sometimes in few seconds. I just don't have the IQ for this kind of stuff. We have a very wonderful editor, Tanushri, who can guide you, who specializes in this segment of the market. You can subscribe to her services. You can contact Equity Master and she will be able to recommend these kind of stocks for you. Siraj Multani is asking, how do you rate the survival of a long-only trader over a period of years? Siraj, being rigid in trading, long only or short only, is counterproductive. All right. I have noticed that film actors, there are film actors who project an image of being action stars. And there are others who are soft romantic heroes. But you know what is common amongst both of them? Both these guys got to learn how to dance. If they don't know how to dance, the Hindi film industry or the Hindi movie audience will just not accept them. So people like me, for example, I was born with two left feet. If you put a gun to my head and tell me to dance, I'll say, boss, goli maar de, mere ko dance karne ko nahi aata hai. All right. But in the market, going long and going short, whenever the market justifies this action, is like dancing. If you want a long-term survival in the market as a trader, an investor is long only, but as a trader, you might as well learn to dance. Long only will not help. In times like these, you're going home taking scallops of the gravy from the gravy train. What are you going to do when the market starts to turn turtle and fall, which inevitably it will at some point in time? You've got to learn how to short. Ashok Kumar Dodeja is asking, SBI is down from 467 to 435 in one single day. Now, what's the road ahead? Ashok, this is what the market is. This is what the market does. It is something that you have to be prepared for. I can only give you a hint because giving you a plan of action would be tantamount to giving you an investment or a trading advice, which I'm not allowed to do. Sorry, compliance issues. All I can tell you is keep your ears to the ground and monitor bond yields. I can tell you with one great regret that I have in the market in the last 35 years. You can see the gray hair on my head. People are not careful. If you're trading bank stocks, if you're trading the bank nifty, and if you're ignoring the bond market, which is the fountainhead of all the money, so the 10-year benchmark bond yield, if you're ignoring from day to day, I'm sorry, but the benchmark 10-year benchmark bond yields were screaming at you to sell SBI for a while now. So I think it's not a question of what to do because you're helpless. It's a question of being a little more alert the next time. The Clearing Corporation of India's website gives you updated EOD or end of the day charts on the 10-year benchmark bond yield, 4-year, 8-year, 11-year, 14-year yields. Please take the time out. There's a lot of stuff available in the free domain in the public. Make use of it and make yourself and your family happier and wealthier. Abhay is talking about Jim Rogers' interview where Jim is talking about a bubble waiting to burst. Now, you've got to understand, Abhay, that this kind of talk is perpetual in nature. I'm not saying that Jim is wrong. As a matter of fact, I've met Jim in his house. Equity Masters, various promotional content will show you my picture in Jim's house. I love and respect and admire the man. But if you talk to some people, Jim, talk to Peter Schiff, talk to Gerald Salent, they're always warning about a bubble that's going to burst. And at some point in time, it will. No denying the fact. If you keep saying something long enough, it will happen after a period of time. Even a stopped clock is right twice a day, every 12 hours, right? But does it mean you start losing your sleep and biting your nails and start screaming at your children and your wife and start throwing things around in the house? As a short-tempered person, I do that from time to time. When I can't take the stress, I break things. It's not something that I'm boasting about, but it happens, right? So if you listen to the perpetual perma bears, you'll think that the world was supposed to end yesterday and you're living off on some extra time, which is about to end tomorrow morning. It's very easy to drive yourself crazy thanks to the internet. I think hear both guys out, perma bulls and perma bears, and understand one thing. The thing about behavioral finance is that it says there are 3 versions of the truth. Your version, my version, and the actual truth. So maybe Jim Rogers is right from his point in time at some point in the future. The perma bulls are right from their point of view in the near future. But the truth may be somewhere in between out there. Don't bother. Josh Matthews asked, what percentage of your portfolio would you allocate to day trading? Well, Josh, I don't invest. I don't have delivery-based equity investments. I trade. I invest a little bit in commodities. And I have a portfolio of sovereign debt. And sovereign debt basically kind of takes care of interest income per month. And since it's very low, that's sovereign is guaranteed by the government. So you can't get safer investments than that. Now, unfortunately, when you go for extreme safety, the return is very small. Now, to drive up that return, I trade. I put money in, I invest in myself. I bet money on myself as a racehorse and I trade. So how much money is in trading and how much money is in investment in fixed income? 70% of my money is in sovereign, all right, and other fixed income. Not just sovereign, but I have a little bit in non-government savings also. And 30% is in trading. I know a lot of friends of mine tell me that not having any exposure to equity investments is wrong. It's just the way I chose my game plan. Feel free to disagree. Tarun Garg is asking, what is the reason for gold falling? Now, you have to understand that gold is a lot of things. Gold is a hedge against inflation. Gold is a safe haven. It's a cave people hide in when there is nowhere else to go. All right. And the way gold had risen last year, it went up ahead of schedule, which is why in the second week of August 2020 and Weekly Cash Alert and Fast Profits Report subscribers will testify to this, I actually gave out profit-taking calls on gold and silver. I said, this has gone nuts. It's gone crazy. It's supposed to come down. Now, people who are telling you that gold will go to $2,000, $3,000, $5,000, and $10,000 in the next 1 year or so are lying. So are people who are telling you that gold will go to $700, $800, and $900. I'll tell you why. I'm not naming names, but one of the biggest investment bankers in the world was a lead manager to a bond issue. When you're a lead manager to a bond issue, you get underwriting and management fees for subscribers who make that issue successful. You know what happened after the bond got listed on the exchange? The organization told its traders to go short on it. You're the lead manager, you're telling the general public to buy it, and then you know it's worth shit, so you short sell it. Now, they said the investment banking division was separate from the trading arm, and there was a Chinese firewall in between, so the trading desk did not have any contact with the investment bankers. These are two separate decisions, so we cannot be held liable. And they were not. All right. 3 months ago, everybody that Uncle Tom and Aunt Henrietta was telling you that crude oil is going to go to $100. Now they're saying, okay, 100 is a little far-fetched. It may not go. So maybe there's vested interest out there. Everybody who tells me that this is going to go up need not be right or need not be a passive bystander. Maybe he's waiting to sell at higher levels. All right. So be very careful out there. Do your own homework. And the reason why gold fell, because employment data was extremely bullish. Lot less people were filing for unemployment benefits in the US, which is a sign that the economy will go up. Therefore, fear factor came down. People said, we don't want to live in a cave. Therefore, we will sell some gold. This is usual ups and downs of the bullion market. Nothing that you should worry about. Am I still bullish for my targets for end of year 2022, 31st December? Yes, I am. Am I holding silver and gold? Yes, I am. Dheeraj is asking, sir, DIIs and FIIs and mutual funds are fighting in the market to eat each other. Money and their main goal is to suppress the retail traders. How do you compete exactly? And how do you be profitable in this scenario? Very intelligent question, Dheeraj. And it is also extremely relevant. There are three things I tell myself before every trading session. I tell myself, hey, Vijay Bhambwani, the money that you're trading with does not belong to you. It belongs to your senior citizen, super senior citizen parents and your young children whose life is ahead of them. Don't lose it. Number two, you're nobody. You might think no end of yourself, but the FIIs and DIIs will crush you like a fly. And number three, don't lose money. So I know that I, as an individual, cannot take them all. No matter how big a position I might take in the market, I will always be a small guy. As a matter of fact, in the days of Badla, before the year 2000, there was a time when I used to take seriously large positions, but then those days were different. In PSU stocks like HPCL, BPCL, and IOC, my company's individual outstanding Badla position used to be 10, 12, 15, and 25% of the entire market. But those days are gone. The market has become too big. So what do you do to survive? You use statistical data. I told you that it is possible to get the footprint. Footprint means where they have kept their feet and which boat they are riding. It is possible to get data of FIIs, DIIs, retail and prop traders, see the winning side, latch on to the winning side. So I could be a big fan of the DIIs today, but if they're losing next week, hey, I'll hitch my wagon to the star of the FIIs if they're winning tomorrow. And I'll go to the prop traders if they're winning day after. All right. My job as a trader is very simple. I'm supposed to put food on the table thrice or maybe 4 times a day for my family. I don't care who I follow as long as I come up on the winning side. And statistics help me there. Justin Nukin, I hope I'm getting your name right, is talking about the market being in an oversold, overbought zone. And am I expecting a major correction? The market's been crazy since the last 1 year. Justin, I'm 100% with you there. I've got so much egg on my face every time I've tried to call a market top. I've got angry viewers of videos saying, are you a perma bear? Have you sold yourself to the bears? Have you sold yourself to the devil? You're always talking bearish. And all I've done was use the words, be careful, there might be a top, book some profits, all right? I've gone wrong so often in trying to say that the market is overbought. We don't know where overbought is anymore. And as long as the price is heading higher, and please see the Snapcoat window tutorial, which is there in the Fast Profits Daily playlist. As long as the Snapcoat is telling me that I need to go long, believe me, I switch my brains off. I ask myself this question, do you want to be an emotional trader who goes by the gut, or do you want to be a profitable trader? I tried being emotional, I lost a lot of money. All right. I'll be honest with you, I lost a lot of money. And then I follow the numbers and I start making money. I said, okay, maybe at some point in time, I'll get hit by a market that suddenly dovetails. But I'm an intraday trader. I will lose money on that one trading session. And the ferocity of the fall will tell me, Vijay, it's time to start dancing on the other foot now. Instead of going long, it's time to go short. So I'm going to change tunes. I'm going to change the music. I'm going to change the LP record that's playing. And from long, I start going short. Follow-up question on margin from Mr. Srinivas Ramanna. Is collateral pledge trading safer for day-to-day and capital is protected with the NSDL CDSL? Well, Mr. Ramanna, I could be a bit wrong here, although I don't think I am. From 2019, SEBI has mandated that you could give securities as collateral margin provided you are squaring up your transaction intraday. The minute you go to carry forward, your span or initial margin has to be in cash, by check. Your mark-to-market margin can never ever be made good by any amount of securities that you hold. Even if you have 500 rupees mark-to-market debit and you're holding 50 crore worth of securities in your account, the broker is at a liberty to square up your transaction just for the shortage of 500 bucks. So can you keep collateral? Yes, you can keep collateral. Can you do day trading on it? I think you can definitely do day trading on it using that as a span margin. But do confirm with your broker. I'm a little patchy out here, although I think it's not allowed. When you carry over your trade to the next day, you will have to have money in your account. And the securities that you're giving as collateral in the account are completely indemnified. Even if the broker gets bankrupt, there is recourse to you to recover your securities back to your demat account. There is a slight process, but you're relatively safer there. So to answer your question, yes, it is better than giving cash. Shri Krishna Kumtekar is asking how to plan trading for natural gas and nickel. Well, let me talk about natural gas since I've already recently talked about natural gas a lot. The one thing about natural gas is don't start trading immediately unless you've had prior experience trading this. This counter is a killer. There are ample dead bodies of traders who've traded natural gas and failed. And whenever I've lost money in trading natural gas, I've lost big money. But on the flip side, when it gives you money, it gives you big money. So it's a hit or a miss. It's a funeral or a feast kind of a trade. How do you trade natural gas? It's about politics. It's about terrorism. It's about geopolitics. It's about financial premium. And it is also about demand and supply. So you might start saying, this guy's gone crazy. Prices are always determined by demand and supply. They are not in energy. Energy is about politics. If I want to rig up prices, which OPEC is doing now, they are rigging up prices manipulatingly and outright blackmailing the universe by controlling the output. They're creating a shortage. And sue me if you want. I've said this on television. I'm saying it now. They're creating an artificial shortage. Natural gas is at least 5 times more abundant than crude oil. So when people tell me that it's going to go to $10 per British thermal unit, I try to keep a straight face. It's a tough time for me to keep a straight face when they tell me it's going to go to $10, but I do manage sometimes. I've heard that every 3 or 4 years you hear bizarre targets like this, and it's kite flying. Okay, do understand that it was half the price of where it is today just a year ago. Just a year ago, maybe even less. So when energy prices double up in a year, you know that consumers will experience what is known as demand destruction. They'll start looking elsewhere. The producers and the sellers also know that. Try to dumb down of what you should do in natural gas rather than complicate it. And for God's sake, don't watch TV. If you want to learn about natural gas, don't watch TV. Go to good websites where sensible people write. 99% of people who appear on television and give gyan have no exposure. It's as simple as that. Abhay is asking is there a way to find out where FIIs and FPIs are putting their money in or when they are taking it out? Yes, there is a way, but there is a time lag. All right. Now, there is something called SAST, Substantial Acquisition and Sale of Securities Transactions. If I'm not mistaken, that's what it stands for. I'm very sure the abbreviation is SAST. Google search SAST BSE India, SAST NSE India. Now you will be taken to URLs where you will see what the FIIs, DIIs, promoters, or even large individual and corporate investor and traders are buying and selling. Now, the reason why I told you there is a delay is because securities law in India, mandated by the Securities and Exchange Board of India, which is the regulator of financial markets, gives traders, investors, promoters, corporates, etc., 72 hours within which they must report their buy and sell transactions. Now, since everything is computerized, I can, if I want to report to SEBI, do it on the same day. But if I do it on the same day, people will follow that trade. And if I'm offloading something, they will hammer it down and the remaining shares will go at a lower price. Or if I'm very quietly acquiring some shares, if I disclose it on the same day, people will buy and the price will go up before I finish my entire purchase. So buyers and sellers resort to deliberately reporting this just before the 72-hour limit is expiring. So this data is available, but it is available with a time lag. Like I said, Google search SAST BSE India, SAST NSE India. All the best. I can see that I have answered almost all your questions, or rather all your questions. And if there are no more questions available here, I would appreciate it if you could join me on 9th August in my webinar on equitymaster.com at 5 p.m., wherein I'm going to share my trading philosophy, my trading methodology, and I'm going to run you through with what I do at Equity Master. And should you fancy free fee, you can even join me in my journey on equitymaster.com. And do provide us your feedback to customer support, and if allowed and open here in the comment section. This is the first time I'm doing this Q&A session with you, for you. This is your website. This is your YouTube channel, where we are trying to help you become better traders and investors so you can make more money out of us, even if it means not paying us and doing this free for you. No problem. But if you can, in your comments and in your feedback, tell me what more do you expect from me and how I can make this process even more better. I will appreciate this feedback, so please do keep it coming. I also wish you have a fantastic weekend. I hope you have a very, very profitable week, a month, or a year ahead forever. And till I see you again in my next weekend, do take very good care of your trades and investments. I'll see you again next week. Take care. Bye-bye for now.